Hey guys, welcome to episode 38 of the At the Coffee Table podcast. I am Jason Klink, your host. And the At the Coffee Table podcast, we try to record at least once a week to talk about anything and everything and maybe bring a little value here and there. This week, my guest is Kurt D'Angelo of Equitable Advisors. Kurt's a financial consultant. And I thought, you know what, being at the end of the year and the connection I made with Kurt, that it would be beneficial to bring somebody on to talk about finances, to maybe a little tips and tricks of finances going into 2021. So Kurt, thanks for joining me today.
Appreciate it, Jason. Thank you for having me.
Absolutely. So Kurt, why don't you give everybody a little bit of your background, how you got to where you're at, and you know what got you in the financial services business.
All right, perfect. Thank you. I grew up in the country out in Western New York. Very modest family, modest living. Put myself through college. I went to SUNY Oswego for my undergrad and master's. Got a degree in secondary ed mathematics education, right, and curriculum instruction, and then a coaching minor. And was coaching wrestling and teaching math in the Oswego City School District for 15 years, right? And so through that time growing up and while I was going through college and being my first professional job, you know, I didn't know a lot about finances growing up. Like I said, modest background. I kind of learned what not to do financially. So
Right.
through the years, right, I just kind of learned quite a few things on my own, and then teaching some business types of math classes to secondary ed students, kind of learned a little bit about that. But I just wanted to get myself started to have a better avenue for my family and for myself, right? A better future.
Right.
Didn't want to have to see them struggle like my parents struggle. And so as soon as I got that first career, right, teaching, you know, I started putting aside money in my 403B. I had permanent life insurance that, you know, builds up cash value tax-free. So it was like a Roth IRA alternative, a couple other little investments, right, just to get started. And then as I got married and had kids and right, started adding, you know, a home, other assets that I had to protect, right? Then insurances went up and other investments came along. So I was able to grow that. And the advisor that I had through that time actually worked with AXA Equitable. And so he's still here. He's one of my mentors. He's fantastic. He's done a good job. And, you know, when I was looking for a different career, within the mathematical world, and I sat down and talked with him about some changes in my life. He said, hey, we're hiring too. And a light bulb went off in my head, and I said, you know what? I would love to do that because take the approach to still educate people on what they have, what options they have available,
Right.
not like selling products, right? So I really loved that about this company, this firm. And well, here I am today, and I'm lucky enough too at this stage of the game to not only help people accomplish their financial goals, but also to hire and train new talent for our firm as well. So helping people help more people. So I love it. It's been great.
That's awesome. So you and I had connected because of my work in real estate, and helping out and advising to other real estate agents because I mean, people may or may not know, but real estate agents aren't technically employees of the brokerages they work for. They're independent 1099 contractors, so they don't get any benefits, no health benefits, no retirement benefits, nothing of that. So and on top of that, when you get commissions, you have to set aside tax money so you can pay the tax man every year. And put yourself in a pickle by not saving the right amount of tax money for the tax man every year. So working with real estate agents, what do you see as like a commonality with 1099 contractors like that?
Yeah, so very, very good point that you made, Jason. I mean, there's obviously individual needs, right? So anything that we talk about is kind of generalizing at this point. So I just want to, like every time we sit down with somebody, we want to learn about their individual needs and their goals. But in general, with almost any 1099 employee, especially real estate agents and brokers, they want liquidity in most cases to their funds, right? So there's good months and bad months, right? Obviously, you get some great sales. You have a few closings a month, right? You get a few commission checks, right? You're on top of the world. Then all of a sudden, the next month, maybe things slow down. Maybe there's a pandemic that strikes and
Right.
houses, right? Or whatever the case might be. That month there might be no money coming in, right? There's no commissions. So what I've found is most people initially, right, that are 1099, they want to try to put aside some money that's liquid that they can access, right? So that's the first thing we want to do is build an emergency reserve with people, right? Whether it's in their bank accounts, CDs, money markets, or in a brokerage account that's tied to their bank account. So they can still get a higher return than what you're seeing with the low interest rate environment right now, right? Within the banks or the money markets and CDs, right? They can do a low risk, maybe bond fund or something like that in the brokerage account. Or they need funds, they can get it back into their bank account that's attached to the brokerage account in about 7 to 10 business days. So that's kind of the area that we look at. But the second area is, yeah, we should be setting aside money for retirement because are you going to sell houses when you're 90 years old, right? We should set aside some money. So on average, right, people that don't have, say, a pension or something like that to offset needs in retirement, average number is 10%, right? Putting away 10% of your income into a retirement vehicle, whether it's a traditional account that lowers your current taxes now, or whether it's like a Roth type of an account that you can get tax-free income from after 59 and a half when you retire and start pulling funds from it. Those are the different things we got to look at in those individual situations. And is 10% the right number, right?
Right.
What type of lifestyle does somebody want to live, right? What do they do when they retire? Those are the things that we have to figure out first, and then we can go ahead and formulate a strategy to implement for them moving forward. So it's definitely still a need, but those are the two main things that we do touch on. Any other questions with that, Jason?
No, I think you really, I mean, it's super beneficial for not only real estate agents, but anybody that might be an independent contractor and putting their buckets of money, so to say, in the right places. It's, I think, one of the things that I've learned over the years is making sure you have the right buckets, the right amount in the buckets. Because I had to make a pivot myself when I left a government job and having that safe and steady income and the safe and steady retirement benefits and stuff. Now I got to pivot and make sure that I'm investing in the right places and saving in the right places and so on. And I don't think I'm on, the anomaly in that situation, because there's probably plenty of people out there that, it's like they'll get to 30 or 35 or 40 years old and go, wow, do I have enough when 55 and 62 roll around?
Exactly. Yep.
So with 2020, speaking of anomalies, with 2020 being the way it is and a pandemic situation, and businesses were interrupted and kept going. I know the real estate market took off like a rocket ship, but there's other businesses that just, they failed because they couldn't sustain the lockdowns and certain things going on. So looking at 2021 and moving forward, what do you foresee as like the best course of action when it comes to either regaining some financial stability or improving financial stability?
Yeah, very, very good points. And obviously, we don't have a crystal ball and we can't predict the future, and the markets tend to go up and down depending on certain situations. But what we see right now, just with the pandemic, right? We're coming off of the pandemic. I mean, there's been a little bit of a pickup in numbers, right? And some areas are going from yellow to orange, right? There's a little bit of pullback right now.
Yep.
But as far as like having the vaccine, right? The vaccine that's almost finalized by the FDA for COVID, that when that was initially released, the markets favored that very highly, right? There was an uptick in markets. People feel confident, right, that there's going to be some sort of solution to this. So we think somewhere in the late first quarter, early second quarter, there'll be enough vaccines pushed out for everybody in the general public. I heard a stat this morning that said there's already like 10 million kits ready to rock and roll, right? That
Wow.
the FDA gives the approval, they're going to be
Yep.
able to push out those kits. I think the first, obviously, round goes to the frontline people, right? In the essential businesses, so those
Yep.
people get it first, right? Some of the higher risk populations, right? So our elderly people in homes, things of that nature. That's where the first round is going to primarily go. But then, eventually doctors' offices and other, Walgreens, things of that nature, right? They'll be able to have some of those as well, and people will be able to get those. And I think that's going to really help once that gets going and people feel more comfortable, right? Businesses will be able to pick back up. There won't be as much restrictions. I think we're still going to have probably some of the masks and some of the cleaning things, right? I think some of those things might still stay for a little while, but at least businesses are going to start to be able to pick up and get back to quote unquote normal. So that's pretty good. The second thing politically, right? We're coming off of the election year, right? Every election year, they're always leading up to it. Volatility in the markets, they tend to go down. And then it doesn't matter what side of the office gets in. So I'm not going to make this a political campaign of any sort. But doesn't really matter what side of the office gets in. We tend to see an uptick in the markets because people feel comfortable knowing how and where they want to invest their funds, right? So we saw that, right? We saw that after the election was over. We saw an uptick in the market from that. And if you look back in history, anytime there's a Democratic presidency and a Republican Senate, the markets tend to favor that actually a lot more than any other combination, which is wild.
I didn't know that.
That's a unique situation. So if we're going to have trends similar to historical trends, right, we tend to see an uptick in the market during this time. But it is a weird time with combining COVID and that, right? So we see some positive signs for the market. We'll see how that goes, right? We'll do though with our clients. I just want to let everybody know we're not day traders, right? I'm not stock jockey. I'm not day trading with people because we do holistic financial planning. So we're looking at, college funding goals. We're looking at protecting, the value of someone's home or the mortgage, or looking at ways of paying off some of the debts, in a quicker way. We're looking at retirement planning, right? Income planning, different things like that. So it's more of a holistic approach. So we definitely look at people's portfolios. We want to make sure that they're diversified, right? Based on their risk tolerance. So we want to be touching on different sectors of the market. So when one sector's up, like tech and medical are like through the roof right now.
Right.
Be the case in another year or 2 years, right? Those might come down. Small caps are at like a real low right now. Obviously, small companies are suffering.
Right.
Another couple of years, we're going to see them come back up. So we want to make sure that our clients are diversified and have different sectors of the market touched on. But I think some signs coming up.
I think that the one positive, or one of the positives that, because I've had a few, this podcast being one of them, because it wasn't for the pandemic, I don't know if I would have had the time to start the podcast. But the other part was, looking at when the market went low, that it was time to invest. It was time to take some money and get the investments going. And then I was just joking a little bit on my last podcast episode with one of my partners, is that, they announced there was going to be a vaccine, and the stocks that I had took off, right? It was great. It was like a rocket. And the very next day, cases are surging, fell off a cliff. And it's like, well, there goes all those gains. But I can see how people get scared of the stock market because of, especially now as volatile as it is, that, seeing that go sky high and then all of a sudden fall off the cliff, and now you're back to where you started from. That can be a little daunting. And it's interesting to me, and what I've learned over the last couple of years is it seems like the financial markets really are affected by the stock market, but the real estate market hasn't been, other than just paying attention to bond rates. The real estate market has really survived well on its own, thrived even this year when it shouldn't have. But I mean, great mortgage rates and higher home values and all the stuff I've talked about for weeks and weeks. So you see the cycles, and I'm sure you see this. You see the cycles, and when it's good, when it's a good time to be in the market, and then a not so good time. Am I close?
So yeah, there's a couple of things that you touched on that I want to kind of reiterate a little bit of. So first, right, the highs and lows of the markets. Obviously, the goal is to buy low and sell high, right? That's
Right.
how you're going to make the money. But timing the market is extremely difficult, right? Even for people that are professionals, it's extremely difficult to time it because you never
Right.
know what type of, like even Tesla, right? All of a sudden, a rocket's thrown through the window of the truck, right? And people see that, and Tesla stock goes down the next day, right? You never know what crazy thing's going to
Right.
happen, right?
Yeah.
Somebody puts out something out there, right? So,
Right.
what really needs to be paid attention to is what's the time horizon that somebody has for that certain goal. If there's a longer time horizon than just time, they can afford to be more aggressive, right?
Right.
But if there's a short time horizon, you don't want to be in individual stocks for like a short time horizon. You want to have a little bit more of a lower risk investment, right? More probably diversification in there. So that way you're not going to see these peaks and valleys, right, with your own account.
Right.
So to kind of tie back into the next thing you said, this was an interesting time period for the real estate market. It was definitely like a weird scenario, but it was like a perfect storm and
Perfect
a good
storm.
everybody in the real
Right.
estate market, right?
Right.
So the interest rates were at all-time low. The Fed lowered those rates to kind of ease money, right, for people that were suffering and needed to get access to loans or money from the banks, right? So they pushed the interest rates way down. Well, obviously that helped with getting mortgages and refinancing, right? And people, pulling out equity out of their homes to do whatever they needed to do to get through some of these tough times. So that was great to help with people that wanted to purchase their home. And then in our central New York area, there wasn't a lot of inventory available on the market, right?
It
So
wasn't.
right, the inventory was so low, and so when something new came on, there was multiple bids. So there was bid wars. So people were getting above ask price, right? So people that were selling, right, were making out like a bandit, right?
Right.
So it was a buyer's market and a seller's market, which was unheard of. So I'm glad that you and your colleagues and people that were in that market were able to be successful. I'm glad, even some of my clients really were able to find their forever home, right? Things of that nature and be able to get in a spot.
Yep.
It was great, but yeah, the markets have different pendulum swings. And again, that's where the diversification really comes into play and understanding the time horizons and the comfort level of the risk that those people are willing to take on. And so that's
Right.
where the biggest part of my job is talking people off that ledge, right? And
Yeah.
making sure we're making the right decisions at the right time.
Yeah. Yeah. No,
So,
that's such great information, and you you learn about it, especially if you're trying to invest on your own, or you're managing a business, or you're working wherever you work. And it's good to hear the financial gurus or experts, really, well, for lack of better terms, drill it home, because it's so important to be able to have a plan, to be able to ride the storm, like we were saying. So, what's your number one tip for going into next year?
so obviously coming year end, one of the big things that we're looking at is just tax implications on your overall right portfolio.
Mm-hmm.
So that's one thing that we want to address. So what we do, whether it's accumulation or right distribution planning, we want to do it as tax efficiently as possible, right? So we like to review everybody's overall portfolio, right? What current assets, current liabilities that they have, insurances that they have, and we find out what's the best way to maximize, right, their insurances and their investments with the minimizing of their taxes. So that's a big thing that we look at here coming towards year end. And then obviously, New Year's is coming up. Well, most people set New Year's resolutions, right? The first one that we tend to see, it has to do with like health and weight management, things of that nature. Guess what the
Yeah,
second
of course.
is? Financial.
I'm gonna,
right?
I'm gonna save a lot of money.
Yeah. So the second goal on average, right, is their financial picture. So let's take a look back and reevaluate our goals for this year. Did we hit all of our goals or did we not hit them? Right.
Right.
Well, maybe some people want to check some of those items off their list before year end so they can feel a sense of accomplishment. Right. So that's something that we're helping people do at this point, or people that are already getting a head start on next year's goals. But again, it's hard to pinpoint one specific thing, Jason, because I don't know what's going to be the best thing for everybody. I know after I sit down with a few people and get to learn about them and their situation, then I can get a customized solution to meet.
Awesome. Great information. It's just planning is planning, and you got, if it's financial, if it's health, if it's business, this is the time of year to really to put your plans in place, to work with the professionals to make sure that you have the right plan, that you're setting yourself up for success. And that's some of the things that I've learned over the last few years, of just making that plan and setting up for success. Yep. Kurt, well, I appreciate you joining me today on the podcast. I'd love to have you on again. I'm sure we could drill down into more of these areas for hours on end, and hopefully not get too deep in the weeds. But if anybody wanted to connect with you, what would be the best way for them to connect with you?
Yeah, perfect. Thank you, Jason. So, I'm on business Facebook and LinkedIn, just under Kurt D'Angelo. So Kurt, and then D'Angelo's D''Angelo. My email is kurt.d'angelo@equitable.com. And my number is 315-532-0443. One of the things that we pride ourselves in is customer service and reviewing with those people and doing complimentary planning up front, right? So it doesn't cost anything to at least ask a few questions, right? Get through an initial plan. And then from there, we're completely transparent what that fee structure would look like moving forward, right? If we were to implement any part of those plans. So I appreciate you taking the time today, Jason.
Yeah.
Obviously, you take a thorough approach with your clients, right? And it shows, right? There's testimony.
Yeah, absolutely.
That you share, which is fantastic. They love it. We like to go through a very good process with our clients and, again, put in place strategies that are customized for them. So thank you today. I do appreciate you having me on.
No, it's absolutely my pleasure. And it's good to have professionals from all of the, from any industry to be able to come on and give their insight and hopefully share some value. And guys, feel free to connect with Kurt at any point. If you need me to put you in touch with them, I'd be happy to do so. I would appreciate it if you would like and drop a comment and share this with anyone that you might feel would get any kind of value out of it. I plan on to have Kurt on again maybe after the first of the year, and we'll discuss what 2021 looks like then, the first quarter. I think that would help out everyone. And until then, again, I would appreciate it if you would interact with our podcast here. It's the At the Coffee Table podcast, where, we sit around the virtual coffee table and maybe have a beverage, maybe not, and try to share some ideas, bring some value, and hopefully come up with a solution or two. So with that, everyone, take care of each other, take care of yourselves, and have a great weekend. Thanks, Kurt.